Hello, everyone, and welcome to today's major markets update for March 2, 2022. And I am aware I said we would cover the bigger picture today, but honestly, I want to first cover the short-term picture, as I think it's a little more critical to assess where we are and if things are progressing the way they should be progressing. Because we're at a critical juncture. And I must admit, given all the bad things that are out there, inflation, the war between Ukraine and Russia, which seems to be only escalating more, and all the other bad things out there, one could really think the S&P 500 should be at 2,000. It's not. Today, another big fat rally. Bear market rally, maybe, maybe not, but we're less than 10% away from all-time highs. Not on all indexes, some have dropped more than others, but I think that kind of paints the current picture. All things considered, we're less than 10% away from the all-time highs. So please let that sink in and think about it. If things are really all that bad in the stock market, yes or no? If things are bad around the world, that's something else. But with that, all the indexes bottomed so far exactly, almost exactly where they had to, what I thought would be a wave 2/B retrace zone. Even the C wave of the wave 2/B target zone has been reached for most indexes, which I presented on Monday. So far, so good. Now what? So let's have a look. All right, let's have a look, because a lot of people think the market should be crashing, but it's not. It's not crashing, except for yesterday, which wasn't a crash. Yesterday was merely a sideways consolidation for the Nasdaq and the Nasdaq 100. This is the hourly chart, as I shared with you on Monday, of the Nasdaq. And all we've gotten so far is a 23.6% retrace of the rally that started at the open on February 24th. That's it. This is really all we've got so far. If this is all of wave 2B, as I said on Monday, we might get this, because this is the thinly shaded target zone. That's a very bullish sign, because wave 2B can be considered complete. If this is the case, it can always become more complex. We can still be in it, for example. So we can still have this. Maybe this was wave A, okay? Something like this. This is wave A. This is wave B of some sort of flat. And then we're going to get wave C. Well, if that's the case, okay. But again, we're right here in this target zone, right there. That's where we bottomed yesterday. And look where we are today. Honestly, the rally starts to look quite impulsive again to the upside. So, okay. So then we have 3 waves lower. Okay, so this is a subdividing wave A, like this. Then we get subdividing wave B, like this. And then let's say this was wave A, because it should be a 3-wave wave B. B waves are always 3 waves, regardless of their position within the bigger picture. Something like this, A, B, and that should then be C. Now let's look then where wave C ideally should bottom. Again, all we got so far is a 23.6% retrace. Either the market is fooling me completely, or this is all we're going to get. So, then maybe for technology sector, this is where wave C should end. So wave 2B can be there already. Don't know yet. This is always when one door closes, another one opens, or we're going to go into this target zone. One of the two. Doesn't look too bad, does it? We need to break below yesterday's low to tell us this is wave C. Very simple. So yesterday's lows now need to hold to allow for higher prices. If we start to see breakouts, technology sector's not there, others are, then we can move forward and start assessing what's next. Okay, so I'm going to take these Fibonacci extensions away. Looks like we are pretty much done We've reached all these target zones have been reached. This one's reached. See, all of this has been reached. Then we had this little wave 4 here, 3, it's all good. Okay, so then we say, as I showed you, we have wave 1A complete. We got a shallow breakdown yesterday for 2B. And boy, even I felt not good yesterday, so I was really confirming the sentiment behind the Elliott waves myself, personally, due to all the situations in the Ukraine. So here we go. Then we should see wave 3C somewhere here, believe it or not, 3. Okay, and then this should be then wave 4 based on simple ideal Fibonacci patterns, or Fibonacci based patterns. 4, and then probably 5, I guess, somewhere here. Excuse me. Let's see. So you can see this very simply at work there. Whoopsies. So, and that should then be 23.6. Yeah, estimated it pretty well. Okay, something like that. And this is then, of course, 3C. Can still be a big bounce. We don't know yet. But you can see there's a lot of upside potential left. And then that should be ideally wave 5. There, and that could still be only wave 1 of major 5. Okay, it really can be. Alternatively, we are already much further along in a 1 degree higher wave count. But again, so far, so good. We're moving away from the lows. We're not moving towards the lows. Let's look at the MACD. It's on a buy signal. Money flow hasn't updated yet. So we'll have to see how this is going to fill itself in. But this is then the upside path I'm looking for the Nasdaq. Okay. Alternatively, as I showed you, we have the A, the B, the C, and then we have takeoff. Fine with me. How about the Nasdaq 100? Okay, same here, Nasdaq 100. It's trying to break above this level. Can zoom in a little bit. I'm going to go to 1 month. Same pattern here. Okay, so we can now, I think, start taking away these fibs there. I'm going to take it away. It looks good to me. Let's say that is wave 5 of C of 4. And this is wave 1. This is there, 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 and then there. And then yesterday's low was a very shallow retrace so far. This was then most likely wave A. This was most likely wave B. And this is then most likely wave C. So this could already be wave 2B. Alternatively, of course, this is only wave A. I'm going to say this is alt B, just as I showed you for, of course, the regular Nasdaq, B. And then we're going to assess. We need to break below yesterday's low to confirm this. And yes, then we can still drop into a little deeper into this ideal target zone. So we don't know with certainty yet which it is. I prefer that the low is already in, but it's not necessary. And then we rally, okay? If we rally, we're going to do the same exercise as I did for the Nasdaq. And I'm going to simply go over each and every index. I'm going to take away these Fibonacci's, right? All the levels have been reached. I'm fine with it. Okay, so I'm starting to move them away there. We reached all the target zones. Okay, that was 4 and that was 5. Then we say this is 1A. Of course, we don't know yet. Could be just a simple bear market bounce, which will then be, of course, made up of 3 waves and be utterly complex and confusing. This is wave 2B. And then we're going to do the same as for the Nasdaq. Apply what we think should be standard patterns. And then this should be, of course, wave 3C. And then here we let the market decide if it's only a bounce or not. From a trading perspective, it would hurt to take some chips off the table, raise your stops, all those good things, so we don't see, so you don't get the overlap that's not allowed for a impulse. And then this is, of course, 4. And then, of course, we get wave 5 to about this level. And all as long as last week's lows hold. Yesterday's low now needs to hold to prevent a more complex wave 2/B, as I showed you. And that would be wave 5. I assume that is only going to be intermediate 1 of major 5. Okay, something like that. Can go pretty quick, should last a couple of weeks. All right, something like that. And then we get wave 2, then 3, 4, and 5. Okay, so that's the most bullish option I can come up with. As long as we hold yesterday's low, that is possible. If we break below yesterday's low, then we should see this lower end materialize. One chart that argues for a completion of wave 2B is the S&P 500. Why? Because here again, we bottomed right here in the ideal target zone. We did a 38.2% retrace right here at the thickly shaded ideal target zone. It doesn't get more ideal than this, honestly. And it looks like we have a nice impulse lower for wave C. So we had a flat wave B, and this starts to look impulsive to the upside as well. So we may, for example, be in something like this. 1, right? Maybe we're going to drop a little bit tomorrow. Who knows? And then we're going to get 2, something like that. I'm going to take this away because we've reached the target zone here. This was the target zone. I haven't changed a single bit. And maybe we're going to get a wave 2, and then, of course, a wave 3, right? A 3, etc. Hey. Something happened. Sorry about that. I don't know what happened. Let's do it again. So we take that one away. Oh, we have, this is most likely C. I have a hard time believing it can still be a flat, right? We do the same exercise, of course, as for the other 2 indexes, but I like it where we bottomed. So this should be 1/B, right? Because it could be a B wave of this flat, and then this should be wave 2. Wave 2 can be very shallow if it is the second wave of the third of a third wave, so say 3. So this is the bullish path. I'm merely showing you the option the market can take. It's not set in stone. Sorry, right? So that would then be something like this. And that should then be wave 3C, something like that. Just like I showed you for the alternative is, of course, that we're going to revisit this low again, somewhere there, right? Same notion. Is this already wave 2? Don't know just yet, but it starts to look once again impulsive to the upside. I must admit, a little pullback and then rally would not surprise me. We've reached with the target zones. We've done what we had to do. It's fine with me. I'm happy with how this all looks, honestly. So take that away. There we go. So it's a little more clear. All right. So this looks to me as good as it can get. Hopefully this gets saved. If we drop lower, once again, still I don't want to see it pretty much go below this level here. But if we hold there, right? Those are the two options. It's just merely pointing out the options that we have, okay? So from a bigger picture perspective, we did a almost 15% correction. Is it the end of the world? Is everybody telling us that the sky is falling? Lots and lots of people. This is the simple zigzag count that I have, where we have a very tricky wave 5 of 3 and a 14.7% correction. ABC, ABC. I like it. Now let's just go back in time here to 2015, 2016, actually 14, 15, and 16. Okay. What did we get here? This was, I think, the Ebola scare, October 2014, which is a much more contagious and a much more deadly disease than COVID. Luckily, it was contained in New York. And we got the crash, massive rally, ending diagonal for months. That is 8 months of nightmare. You think it was easy or difficult now? This was a mess. Look at this. How are you going to track or trade this? This is a ending diagonal, wave 5 of 3. And then we get a flat wave 4. And what did we get? We also got I think it was 15% correction. So it's happened before. There you go, 15% or more actually than we have had now. So it happened before. So nothing out of the ordinary with the current correction, 15% correction. And by the time we ended it in February 2016, we've retraced all of this entire rally. Classic, because this wave 4 retraces 1 degree lower wave 5 back to around the previous wave 4 low. It's nothing out of the ordinary. You think now it's difficult? Look what this is. This is a round trip, right? From October 2014 to February 2016, a round trip. People are now screaming we're in a bear market because, for example, the IWM has retraced the entire rally since 2011. Yawn. Honestly, yawn. It's happened before. Folks, if you don't know your history, you tend to repeat it, right? That's what's happening. These people are repeating it because they don't know it's happened before and before. This is a nightmare. This has been a nightmare to track and trade. Really difficult. Ending diagonals are disastrous. Look at this flat, down, up, down. What a nightmare. Okay. And what do we have? Just to retrace back to where we were in 2011. It's happened before, so why cannot it happen again? Just want to show you that the current environment is not any different than what we've had before. The market has always been difficult. It will never make it easy. It will always tell you once one door is opened, 2 more are in front of you. If you were back here in October, November, December, January 2015, you would do a simple, just like I did, 1-2 setup, do your Fibonacci extensions, and then project where wave 3, 4, and 5 should go based on the ideal Fibonacci extensions. But this is what we got. Again, the market doesn't owe us anything. You simply start off with what you think it's going to be. This is where you anticipate, and then you monitor it and you adjust accordingly. And not until you finally are about 70% in this mess, which is clearly nearly untradeable. This is untradeable, honestly. Then you know, oh, it's a diagonal. So can this turn into a diagonal? Yes. Can this turn into diagonal? Yes. I don't know. I simply go with this is the preferred path of a normal impulse pattern, but I really know that we can, for example, get something like this. It's absolutely possible. I can show you, for example, this as well. Let's go to, not this one, this one. This is 2019. All right, 5's up. And look what the mess we got. This was a leading diagonal. We can simply expect something like this as well. There's nothing to tell us it will not turn into this. The market will decide based on all the information that becomes available. And it wouldn't surprise me if we're going to get something like this, based, of course, on all the honestly nightmarish news we get from Ukraine and all the horrors that are going on there. So it's never easy. It wasn't easy, and it's not going to be easy. That's the simple thing. So we have to anticipate, we have to monitor, we have to adjust. It's, again, I'm not washing my hands in innocence, saying, oh, I'm just going to hand wave here. No, we're setting loud and clear expectations, anticipations, and then we'll monitor it and see if it's going to get filled in. Just like we had here, we were expecting 1, 2, and then you simply do, of course, a standard Fibonacci-based impulse pattern, and it doesn't follow it because it doesn't have to follow it. This is a very weird leading diagonal. People say it has to be 3, 3, 3s or 5, 3, 5, 3, 5. This was a 5, 3, 3, 3. Diagonals are a lot weirder than what's in the books, and I believe that is because Mr. Elliott didn't have enough information available back then in the 1930s to observe a lot of diagonals. This was a leading diagonal first wave, okay? And then we dropped out to the beginning. This is a classic textbook diagonal pattern, just as we have here. Look at it, we retraced the entire diagonal. Look at what this doesn't look initially like a diagonal, but it is all part of a diagonal, okay? Just wanted to make clear that the path forward now over the next few days and weeks, it's not necessarily going to be this, but I cannot anticipate a diagonal in the sense that I can put it on the table for you. Oh, it's going to be a diagonal. I don't know just yet. So we have to go through a lot of hoops and a lot of twists and turns. So it's not just going to be easy peasy, so to say, from now on. It will continue to be a nightmare. And that's welcome to the market, but we'll track it, we'll trade it, so it is, or anticipate it, and eventually we'll get there. I still have a high conviction that we're going to reach 5,500 plus or minus 500. So far, so good. Today was a strong day. That is good. We bottomed again short term in the downside target zones we had to. How's the Dow Jones doing? That one reached the 50% retrace, as you can see here, also in the ideal wave 2 target zone. I might have adjusted a little bit compared to Monday. I don't remember, but it's pretty good. I don't think I changed it too much. And let's see if we can get the breakout. So we don't have breakout on this one yet, so I'm not going to do the upside targets for this one, but just wanted to show you that we did bottom where we had to for this wave 2B. And now we need to see the breakouts, and we need to clear 34,300. I really want to see above that level, because then I can take this this alternative off the table. Okay, with that alternative, that's the alternative count. I'm going to do it in blue. That's going to be off the table if we break above it. Would be very nice for the markets to do that. Then I can at least take that option off the table. Same here for the semiconductors. The semiconductors definitely retrace more than the technology sector for that matter. Now here is what I was looking for the C wave target zone. I expected the B wave to bounce a little bit higher. That was on Monday. It didn't happen. So here I haven't adjusted anything. So here is what I expected for it to bottom. On a closing basis, this is pretty much where we bottomed anyway. So let's adjust this one as well. So I expected this B wave to go somewhere here. Well, that didn't happen. Okay, so again, I can't get every single move correct. So the B wave was yesterday's high before the reversal. Okay, that's the B wave. Now let's look. Okay, I'm going to take the orange fibs away because that was to support the notion that we had a new impulse higher. Now let's look. So this was where I originally thought the C wave would bottom, thinking the B wave would go back to that high. It didn't. It stalled here. And look at this. Look at this. This is where the C wave bottomed, right here at the 161.8 extension. See that? It doesn't get more accurate than this. It really doesn't. If I honestly probably tweak this one a little bit more, or a little bit there, a little bit more, we can probably get it almost picture perfect. You see that? It doesn't get more perfect than this. So there's a 62% retrace. It's like, man, what more do you want? Again, we bottomed quite good already in the original B wave target zone I had, anticipating a little bit higher B wave. But this is good as it gets. We had 3 waves lower. and then I think we had 3 waves higher, and we had 5 waves lower, 1, 2, 1, 2, 3, 4, 3, 4, 5. Perfect. And now let's see if we can impulse higher. I do need to see a breakout though. Okay, I do want to see a breakout before I start saying, okay, let's do projections for wave 3/C. Okay, not there just yet. Starts to look impulsive once again. Maybe we get 1, 2, 3, 4, 5. So I'm going to say here, this is then 1A. Again, what I like is that the market has complied pretty well with where it had to bottom, which gives me another layer of conviction that we are in a new larger impulse higher. So the question is, can we get wave 4, and then a wave 5? That would be fantastic, and that would then be wave 1. Something like that. Could also be wave A again, but again, looked pretty good from what I anticipated versus what we got. Nothing out of the ordinary yet. 62% retrace. Okay, so I said if we go below the 76.4% retrace, caution is advised. We bottomed right here in this ideal thickly shaded target zone. So nothing out of the ordinary. 62% retrace. The semiconductors gave us a picture perfect wave 2/B. The Nasdaq didn't do so much. All right, relative strong, so that's good. Then we move on to the IWM. Look at this. We bottomed right here, also at 161.8% extension of the target zone. I think I had it somewhere here. It's about the same. It's about the same of what I originally projected. So we can consider the IWM complete as well, with of course the caveat that this can also be wave B, of course, right? Wave B, and then we're going to go back one more time. Let's see here, and that was all of wave A there, and then we can go back one more time. It is absolutely possible, see that, to reach it. So that is still nothing out of the ordinary. It is possible. Okay, I don't know just yet. It's not. This is not my preferred view that we're going to go one step lower. I prefer this as soon because again, it looks quite impulsy, I would say. Again, like that. Okay, and then we should ideally bottom somewhere here for this wave 2, and then we can move higher on the breakout. And if we start breaking down, we can go lower. Those are really our options, and we let the market decide which one it is. Okay. Again, from a long-term perspective, we retraced the whole year of a rally. Nothing out of the ordinary has happened before, and we simply don't know yet if we're going to get a standard impulse or if we're going to get a leading diagonal motive wave, because both are motive waves. Right? Either you have an impulse, which is non-overlapping, or you have a overlapping leading diagonal. One of the two. We'll know soon enough. I prefer, of course, the standard impulse. It's easy to track, it's easy to trade, but the market is full of diagonals and weird moves. So don't count your pennies just yet, but it starts to look good. So for the IWM, if we then do some nice fib work for this one here, I believe we topped there, right? Then ideally, because that's the count, I believe it was, yes, that is the wave count. Ideally, of course, we can start looking for something like this. Ideally, huh? This is all ideal. I'm just going to put it in red here. Not really taking wave labels into consideration. And then yesterday's low was wave 2. And then we're going to go to a wave 4. Again, hopefully, this is the pattern we're going to see. And the market will eventually decide which it will be. This is, and then we're going to go to wave 5. Wouldn't surprise me. Look at that, right into a resistance there. Wave 5. All right, this is the ideal wave pattern, and we'll know soon enough. Okay, we'll know soon enough what it's going to be. Shorter term, still need to figure out if this is the new impulse, one of 3/C, or if this is still wave B of a more complex wave 2 flat. 50-50 maybe. Now I prefer the impulse because things bottomed where they should have. This was my ideal bottoming target zone, and this is what we got, 38.2% retrace. It's not at all out of the ordinary. This is still as anticipated. Yes, technology did a very minimal retrace, so be it. And now we'll have to see if it can follow up with further upside, if we can start to see breakouts and all those good things. Okay, once we get all of that confirmed, then we can maybe go back to the bigger picture. But again, the bigger picture tells me to expect a final fifth wave. That is still my preferred view. And now it's simply a matter of how is this first wave of wave 5 going to fill itself in. That is my question mark. There's still some uncertainty out there if we're going to see a pullback first once again, maybe scare away even more people, get more frustration going before we can launch, though I prefer that we are getting ready to launch ourselves in this wave 3/C. And as you can see, we're moving away from the high made on February 24th. We're not moving toward, we did it yesterday, but this also shows you why it's good to let the market just take care of itself for a while. Okay, just no update. Yesterday we bottomed where we had to, fantastic, and now we rallied out of it, fantastic. That's all we need to do. So give it time, let it develop, see what's happening, and now we've closed the door for this downside because we reached the downside target zones. Now the next door is, are we going to do the 1, 2, 3, 4, 5 setup, or are we going to do one more flush lower? We'll know soon enough. But I think so far things are tracking along quite nicely from a bullish perspective. The charts look pretty good. MACD here, look at this, is turning on into a buy. Okay, so that is really looking handsomely well. Now we need to get back above the 200-day. I think if we get back above the 200-day, we're looking really more confident. Dow Jones is still a bit behind. Semiconductors as well, definitely dropped deeper, but nothing out of the ordinary. Nice FIBS work here, 161.8, 68.2%, or 61.8%. Perfect. So far, picture perfect, nothing out of the ordinary. Let's see if we can get a nice impulse follow-up, little pullback, and then off to the races. I would really prefer that. And then we'll update on the bigger picture once again, maybe on Friday or next Monday. But for now, I want to really make sure I'll nail this shorter term so we can really get the setup in place for, hopefully, as I said, the ideal impulse pattern higher. That's preferred. But as I said now so many times, we don't have to get it at all. So keep an open mind, stay nimble, all right, stay flexible, so to say, stretch, stretch your mind, anticipate the worst, honestly, right? Prepare for the worst, hope for the best. The best is the standard impulse. The worst is some sort of diagonal. And we'll know soon enough. And maybe we'll need to wash out a few more weekends before we can finally move higher and get the initiation move finished for this larger wave 5 that I anticipate. As long as last Thursday's low holds, that remains my predominant point of view. If it doesn't hold, expect low 4,000s, I would say, for the S&P 500 before we move higher. Again, with today's move higher, there's more and more overlap occurring in the indexes, which continues to suggest this is part of a larger correction. And with that, thank you so much for listening. Thank you so much for being a Valued Premium member. Take care, trade safe. See you all on Friday. Bye.